wondered, how are Bursa Malaysia's marketplace being monitored? Would you like to know how the marketplace is maintained orderly and fair? Welcome to Bursa Malaysia. We are the frontline regulator of the equity and derivatives markets. So, what does this mean for you? Through Bursa Malaysia regulation, we ensure the markets you invest in are orderly and fair, so that you have timely, accurate, and complete information to make informed investment decisions. Are able to trade in a fair and efficient environment. Have confidence in your brokers to provide secure and trusted services to you. So, how do we protect the marketplace? We have multidisciplinary teams in Bursa Malaysia regulation that focus on specific areas while collaborating with each other to provide a comprehensive network of safeguards for investor protection. We also work closely with other regulators and law enforcement agencies. Real-time surveillance of the market. We have a market surveillance team that acts as your market police. They monitor the stock market against irregular trading activities in day-to-day trading. This team uses an automated surveillance system to monitor trading in the equity and derivatives markets in real time. Should irregular trading activities be detected, this team of specialized analysts will fact-check and engage the brokers involved for their immediate action. Supervision of intermediaries. As safeguarding the integrity of the marketplace is paramount to us, our intermediary supervision team secures the protection of your trading and deposits through consistent broker monitoring and inspection. Disclosure. Continuing listing obligations and gatekeeping of listed companies or products. To be ASEAN's leading, sustainable, and globally connected marketplace, Bursa Malaysia places high emphasis on the quality of our listed companies. This begins from the approving of new listings on the exchange, through to ensuring that listed companies remain of quality through governance and compliance. As it is imperative for investors to be well informed in the fast-paced financial world. Bursa Malaysia regulations listing and corporate surveillance teams monitor companies' corporate announcements so that they are disseminated to you in a timely and accurate manner. Enforcement action is taken should there be any failure to do so, or should there be any material inaccuracies to the announcements made. As we are also a venue for listed companies' secondary fundraising, our relevant departments work together to ensure investors' funds are always used as mandated. We have a dedicated team of finance experts to examine corporate disclosures, including financial reports, so that they are accurate and timely that you can rely on. Within Bursa Malaysia regulation, we have subject matter experts that look at the various international sustainability reporting frameworks that are constantly evolving to ensure that our disclosure requirements are appropriately benchmarked. This ultimately drives the desired improvements in our PLC sustainability disclosures as well as practices. Taking enforcement action. So what happens when the persons are regulated by us? Be they brokers, advisors, listed companies, directors, or their representatives, breach our rules. Appropriate action will be taken against them. The types of action taken would depend on the severity of the breach. Suspected breaches will be investigated, and enforcement actions will be taken if the breach is proven. Our enforcement proceedings and actions are consistent and fair as cases are discussed in a robust manner through our regulatory committees, comprising independent individuals with relevant experience and backgrounds. Policy and rulemaking. Bursa regulation is the guardian to the 10 rulebooks of the securities and derivatives markets. Rules drawn up by the regulatory policy and advisory team are always outcome-focused. Industry or public consultations with the relevant key stakeholders will be undertaken, alongside rigorous benchmarking processes to ensure the rules are relevant, effective, fit for purpose, and on par with international standards. Each multidisciplinary team in Bursa Malaysia regulation is intertwined and interact proactively to ensure high standards in market integrity.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia in collaboration with Afin Huang Investment Bank that will talk about building an investment habit. Start small, stay consistent, and grow big. So that's the webinar title for tonight. So my name is Shin Chu. I'm the moderator for this session. Now I'm sure you all have heard of this peribahasa, right? Sedikit-sedikit lama-lama jadi bukit. So in this session, we are going to discuss how micro investing can help us to build wealth, right? How we can start small and grow our wealth sustainably. So before we begin, here's a disclaimer. So whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed security that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. All right, allow me to briefly introduce our speaker today. We've been very honored to invited the head of digital and partnership of securities retail business from Afin Huang Investment Bank, Mr. Kok Kyung Chun, to come to this session to share with us about micro investing. All right, so a huge shout out to Afin Huang Investment Bank for agreeing to partner with us in this session. So our speaker today, Chun, okay, graduated with a Bachelor of Computer Science from University Technology Malaysia. He had a strong interest in stock investment since the age of 15 years old. He has over 20 years of personal investing experience in Malaysian stock market. So, very pleased to have you here today, Chun. You may unmute.
Hi everyone. I thank you for having me today.
All right, so I'll stop sharing my screen. You may go ahead and do the screen sharing.
Sure.
Okay, the floor is yours. Fantastic. We're looking at the slide now.
Okay. Okay, good evening everyone. Okay, let's start with a quick question. Sorry, let's start with what are we learning today? Why the first one is why building an investing habit and how to start allocating your money to start investing. And also, we will share about the simple step to pick a stock, and also the finding the right stock using the simple fundamentals theories or fundamental analysis. And what are the common mistakes that will be made by stock investor? And also, I will be introducing the micro investing tools later at the last. Yeah. Okay. Let's start with a quick question. So imagine that if you have 200 ringgit excess money every month, what will you do? Will you spend it, save, or invest? Maybe you can type in the chat so that I can see what are the response will be. Wow, it looks like majority will invest, some are save, will do the saving. So imagine if let's say, what if you save the money every month, this money every month since 10 years ago, how much returns that do you think that you can get today? Save means that you save in fixed deposit or your saving account. Yeah, this question is because it will involve mathematics calculations. So let's compare the returns if let's say you invest versus your saving in fixed deposits. Yeah. Okay, let's start with why. Okay, so this chart will show the comparison between the returns for investing versus the saving. So assuming that your investing returns give you 8% per annum, and your savings give you 2.1% per annum, which is typically FD returns in the bank today. So for the 10 years time, your returns will have a gap of 10,000. So the gap is due to the compounding effects on the money that you put in, because the compounding interest is actually will earn interest on your interest that you have earned. So times is actually your at least for compounding interest to take the power and the effect. So as you can see, for the first 3 years, your returns when in investing compared with saving, is basically the gap are very, very small. But come to the years 8, 9, and 10, you can see is the chart divergence is becoming bigger. So that's actually the power and the effects of the compounding interest, where you put in an instrument which generate a higher return versus that the instrument which generate lower returns. So by regular investing, because you can start with a small amount. So it actually will reduce your emotion stress to time the markets. Means that you can invest every month 200 ringgit from the pocket that you have to the market or to other instruments to generate the goals that you want. So it will build a strong financial discipline as well. As you keep what you do every month is basically you pay yourself to investing before you pay your bills or other expenses. So we will also stay on track to achieve your goals. So means your investment goals or your financial freedom goals based on the amount of returns that you are looking for. And fifthly, it will also protect your wealth against inflation. As you can see from the chart besides, the food inflation is average at the rate of 3.2% per annum. So it's actually from the date between 2010 to 2024. So if let's say you were to put your money in fixed income saving, so basically your saving the inflation will erode your saving. So in the end, this inflation is actually will get your money's values become smaller, and your spending power will be lower. So it also will grow you to an informed and confident investor. If you say we are regularly investing, because you will try to find the information on the financial market, investment product, and also the risk management. So the question now is it easy to start with investing of 200 ringgit a month? What do you all think? Okay, that's a system to it. For this, how do you actually allocate your income for investing? Yeah, let me share with you on how to start allocating your investment. Okay, this system is basically known as the money management system. So it's a jar system that's actually created by this T. Half Hacker. So basically, your money will be allocated to the six different purposes. They call it jars. So the first jars will be necessary, means that this is the amount allocated to pay for your daily living expenses, such as your food, the daily food, the transportation, your utilities, groceries, and the rest. So the second task will be your educations. So this is basically to invest in yourself, where you will have a self-improvement. So you develop yourself on your skill set and upskill yourself in order to have yourself ready to and have the capability to generate more income for yourself. The third one is actually the long term purpose, and such as saving for big purchase, or those emergency expenses. So big purchase could be like your down payment for your car or your houses or children educations. And the fourth will be the financial freedom, which is a very interesting job. So basically this chart, the purpose for this chart is basically to build your investment and your passive income. So you want to become a financial freedom one day, right? So investing is the first step to start. So for this chart, actually you will never spend the principal, meaning that the returns that you generated from this job, you will never use for your daily expenses. So you can invest in different instruments such as stock, ETF, bond, or real estate, or unit trust, which you might familiar or which better suits your end goals. So the Places is basically actually a funds that actually you can spend without guilt, having a guilty feeling for enjoyment, and it must use monthly to stay motivated lah. Means that it's actually this money is actually to pay to yourself to get you to pamper yourself and to enjoy yourself. So lastly, it's basically a gift jar, means that you give this money back to the community to help others, such as donate to the charity, NGO, or sponsor children education. Okay, so next one. Today I will cover more on the stock investing. Because I think this is Bursa event, so stock investing, and also Afin Huang is a broker in Malaysia. So what we are doing daily is on the stock investment. So basically, there are three simple steps to pick a stock. The first one is actually we look at the big picture first, and then we drill down into the team, or you can call it a sector. And lastly, from the sector, we pick the company which will ride along the tide. So usually macroeconomy will influence the overall market directions, and stock market usually will move alongside the macroeconomy, meaning that the economic Malaysia. So there are a few indicators that actually can be used to identify whether that the economy is in expansion mode, slowdown, or in a recession. So Bank of will release these GDP projections, growth projections every year, where you can obtain this information from BNM website. So to know that whether that this year the market is in expansion or in the recession. So this will give you a better guidance on how to invest or where to invest, which instruments to invest. So also the inflation data will also determine whether your money will have more spending power with your money that you have. So interest rate, basically, if I say the interest rate is reduced, so the make the monthly repayments for the home loans or the car for the home loan or the car loans is actually can have more money to spend. Once interest rate is reduced, so the repayment amount will be slightly lower or decrease. So also we can look at the employment data, because the more people have job, meaning that they have more money to spend, which will flow directly into the market of the economy. So the second one is basically after you have determines the macroeconomy, the next thing you will look at is basically the sector, because different sector will perform differently under various economic conditions. So take example that the sector that's actually booming at this juncture, I think everyone's knows. So AI basically is the booming sectors in the recent 2 years. So everyone, and also the company is also actually investing into this sector, AI. So with AI, so what are the sector you might think of? What are the sector that might benefit from this trend, the market trends? So to focus on the sector which is in expansion mode to increase your winning rate. And also, if I say during a market downturns, then you need to try to find some things that this is in the defensive sector or to be in defensive mode. Yeah. Okay, so key factor that can determines a sector. So we have to look at the sector growth outlook and what are the demand, whether the demand is increasing or decreasing. So industry cycle, whether the industry is in maturity phase, such as, for example, the industry which is in the maturity phase is smartphone. So the growing or the booming cycle is AI. So and those that with decreasing cycles industry will be, the example, the oil and gas after since the launchings of the EV in the market. So sometimes regulatory developments might also affect the sector, such as when government introduced GST. So some sector, such as the company that do the point of sale system, will be benefited. Why? It's due to that all the company, be it a big company, a small company, so they need to report tax to government. So they need a system to help them to do this every month. So after you have identified the sectors that you are going to dive into, then you'll try to find a company in that sector to ride along the tide. So when doing company analysis, usually we will look at the company income statement, cash flow statement, and balance sheet. So this information can be easily obtained through the Bursa website, company announcement under the quarterly reports or annual reports. So for finding a good company, try to find a company with a strong balance sheet with the consistent earning. So means that we can see the profit is growing year-on-year basis. And also for buying company, so it has to be reasonable valuations compared to the peers. Means that we have to buy a company at the right price rather than buying a good company at the wrong price, which could turn into a bad investment. Yeah, I will deep dive into a few areas that how to find a right stock using a fundamental analysis or theories here. The first we'll look at is actually at the top level, whether to understand the company business. Because when you invest in company, basically you are doing business with the other shareholder and also the management team. So you need to find a right management team to know that whether that this company can deliver or not. So the first to know is that you need to know what does the company do first, whether that they are selling product or they are selling service. So because product and service, it could be that whether this product is in increasing demand or is a decreasing demand. So that's the things that we will look at when we are analyzing one company business. So secondly, whether that this company service is providing to business, means that I sell my service to another business, or I sell my service to another consumer, the end user. So if let's say if it is a B2B company, meaning that your business is on a B2B basis, so you need to understand and try to find out what are the companies, who are the main clients of the companies. So because we don't want a company to solely rely on one client to actually to generate the profit, because there's a very high concentration risk from there. Thirdly, the revenue model, whether that the company generate the revenue through a contract by signing a contract with another company, or whether it's a project based, because contract and project is usually it's just one time off. Means that once you executed the contract for, take example, 2 years or 3 years, once you finish, then the company have to find another contract. So have to keep finding the contracts. So if let's say it's on a subscription basis, means that people will subscribe to the service, such as Netflix. Take example, like the Netflix business, where you subscribe on monthly basis. So the revenue is actually in a recurring mode. So also to determine whether that the company business is on the retail sales. Yeah, retail sales, then you have to be more sensitive about whether people has money to spend. Yeah. Okay, number 4 is basically a competition. Who are the main competitor of the company? Yeah, I think this is important to understand that what are the company's moat, what are the unique selling point of the company's product or the services. So this will give advantage to whether that this company will perform well. Yeah, when competing in the market. So and also need to look at is what are their expansion plans, the capex, the capital expenditures that they are putting in every year. So whether that they are entering into, they have planned to enter into new market or launch new product for this year or the coming years. So this will determine whether that the company's profitability will grow over the times. Okay, last but not least, the risk and challenges. What risk could affect the business, whether that regulation will affect the business. For example, the regulation or the recent hot topic that we heard every day is on the US tariff. So some company who do export is actually affected by these regulations, which are imposed by the US government. So all this information all can be obtained from various sources. Actually, you can get it from the Bursa Malaysia website. If you are stock investor, basically you can also get it from KLSE Screener, Business News website, and analyst reports, which can be obtained from like securities or stockbroking company. Okay, the next one is how to look. You also need to look for the consistently growing revenue and profit for a company. So strong demand, we need to determine that the company product has strong demand and also the increasing demand. So you also need to know that the company is expanding its business over the time through the capex and the plans and the strategy that they put in every year. This can actually be obtained through the quarterly reports, especially on the prospect side. Yeah. So, and also we need to determine that whether that the company management has the ability to deliver the result with different costs through cost control and business growth. So meaning that the management have to know how to run the business with a lower cost. So which in the end will result or will benefit the shareholder. So this chart is the sample of the always say that a ladder-like growing a revenue growth company. So you can see that on year-on-year basis, the revenue is increasing. So does the profit. So that, as you can see, there's some 2 years of revenue dropping. So we need to analyze why these 2 years the revenue of the company is dropping. So once you find it out, then you will need you will know whether that this company is worth investing or not. So take example that as this chart, right? So it's due to the pandemic, the company business is being affected. So the revenue will drop for 2 years, but slowly after the pandemic is over, then the revenue is back to normal and even stronger now. So some tips here is actually to, when you look at the company revenue, basically to try to avoid a large fluctuation in revenue and profit without a clear reason. So without a clear reason means that if let's say you don't know why the company's profitability is suddenly drop, then I think you can move on to the next company to look for the next company to invest in. Okay, on the third one. So we also need to look at the debt and the cash positions of a company. So these are the key metrics or things that we analyze. Because usually a high debt company they'll have too much borrowing, and which can limit their growth and also increase the bankruptcy risk. So the example on the company like oil and gas company, because their assets, they are heavily investing in the asset. So usually they will have a high debt, high borrowing from the borrower or financier. So a strong balance sheet company help a company survive during a downturn. So this we will feel safe when when the recession happen. So we know that we have confidence that the company can navigate through the difficulties. So low debt or net cash position will give a company the flexibility for expansion, meaning that they have cash to do more things, to expand the market, to do the R&D for a new product, and also pay the dividends to the shareholder. So you should also be alerted if let's say there's a rapidly rising debt without a clear returns. So this could be a warning sign. Okay, let's look into how to identify whether the company is in a net cash position or is in debt positions. So whether that they are using gearing. Okay, cash and equivalents is actually a current asset of a company, which can be liquidated quickly. So usually it's in a day or 2. So this type of cash and equivalent can consist of cash in bank, means that the cash that the company placed in the saving account or the current account of the bank, or in the fixed deposit, or the company invests in money market fund. So this asset is actually highly liquidated, meaning that whenever the company need extra cash, actually they can actually withdraw it or sell off the fund. So for borrowing, borrowing represent the money that the company borrow from the external party or external financiers, usually it's from a bank, through the bank loan, revolving credit facility, or the overdraft. So from the sample on the left here, so we'll see that this company have a cash and cash equivalent to 3.8 billion, while it has a long-term borrowing of 144 million and a short-term borrowing of around 75 million. So after you deducting the borrowing from the cash, so you have a net cash of around 3.5 billion. So we can, from this analysis, we will know that this company is actually in a healthy position where it has net cash and they can do more things with the cash that they have. After looking at the cash, so we also need to look at the cash flow. So basically, cash flow for a company is like a blood circulations in our body. So blood actually carry oxygen and nutrition to every organ of our body to keep us alive, while cash flow is actually carries the resources to every part of the businesses to keep it running. So without cash, basically some company might have a cash flow issue, which might turn them into a difficulty. So positive cash flow, basically the cash inflow to the company exceeds the cash outflow, means that the cash that being paid to the supplier, to the debt, to serve the bank loan, and also staff salary, and also daily operations. So positive cash flow company allows company to sustain over the difficulties. So without having to borrow, so they also can fund their growth, and also pay dividends to the shareholder. So yeah, this is for you to take note that the company that report profit is not necessary will have a positive cash flow. So you take an example of this cash flow statement from one of the company listed in Bursa Malaysia. So this company reported 85 million in profit before tax of the year. However, when you see the net cash flow here from operating, is basically a negative, meaning that they do business, but there's no cash inflow to the company, meaning that they are still spending cash to do the business. It's due to that you can see that there's a high chunk of the money is actually stuck at the receivable, means that the company deliver the service or the product, but they couldn't get the cash back in time. Also, for the company, for the investing activity, the cash flow from investing activities is also negative, due to that they are investing in different in the intangible asset. So from these calculations, we'll know that this company might have a cash flow issue. If let's say this cash flow issue is prolonged for multiple years, then this profitable company will turn into a difficulties or a risk to the investor. So when we analyze a company, so we need to study the cash flow through the cash flow statement, whether that there's a free cash flow to the company for the period, or it's profitable company but it's a negative cash flow, which is a red flag to the investor. Okay, last but not least is actually how do you assess the valuations, the company valuations. So the first one, I think the first one you can look at is actually the earning per share. So how much profit that the company is earning for one share. Usually is the amount, the profit amount, divided by the outstanding share in the market. So when we look at the earning per share, we need to look at the company which have a growing earning per share, which imply that their profitability is improving. The next one will be the price per earning, means that you already have the earning per share. Then you look at the price of the company listed in Bursa. So price per earning basically is to pay, how much do you pay for each 1 ringgit of profit. So means that it takes, how long do you need to take back your investment? Take example, the PE ratio of 8, right? It means that you need 8 years to take back your initial investment. So usually lower PE means they consider as an undervalued company. So, but this is not just one metrics that you can look at to determine whether that this company is undervalued or above the value. So the other metrics that you can look at is basically the dividend yield for those that investor that who like investing to generate the dividend income. So these are the key metrics that you will look at. So dividend yield basically is that how much return per the share that you have purchased for the year. High dividend yield means higher income. So we also need to be alerted that whether that this company has the dividend policy, and whether that the dividend payout is stable. Because some company may just pay, or this year pay high dividend, next year no dividend. So if let's say you are into the dividend investing, so these are the metrics that you will look at to make a decision whether to invest in a company. So return on equity, ROE, is basically this doesn't mean how efficient the company use our invested money. Means that how effectively they use the million ringgit that you have invested in to the company. Higher ROE means higher efficient, it's more the higher efficiency the company is. So usually when we look at ROE, we look for a company is between 10 to 15 or above 15. Meaning the higher the ROE, basically there's the company is worth investing. So lastly is on the profit margin, whether that what is the profit margin percentage? How much profit that can be done from the revenue? This is the metric that's to gauge how efficient the operation of the company is. Okay, after we have find the right company to invest in, so I will share about the common investing mistake that I think most of the investor might do, or not necessarily might do. Okay, so the first one is basically the emotion investing. So sometimes you heard that, hey, this stock is increasing like crazy. So some investor might feel greed, right? Because it's keep on increasing and increasing every day. So if the tide is getting high, so I want to ride along the tide. So this is what we call the emotion investing, means that the FOMO, fear of missing out, that this company is doing good, I invest and I chase high. So this should be avoided when do investing, because usually greed will turn you into a bad investment. So secondly is on the over trading. Yeah, for buying a stock, every stock purchase will have a cost. So if let's say you are buying a stock in and out frequently, so the cost, this might lead to a higher cost of your investment. Also, some investor not doing research when buying a stock. What they do is basically to try to get the tips from friends. So give me tips, based on the tips, or then say, oh, friends say, oh, this one you can buy now. You will increase to a certain amount, increase to 2 ringgit for a certain amount. So meaning, so they just heard it without doing their own analysis whether that this company is worth buying, and also whether that this is a bad company. So all this not doing research investor usually will have a bad investment decision. So besides that, so for investing in stock, usually we will do a diversification. We don't put all your money inside one asset or one company, because if let's say that the sector or the companies turn bad, so it might affect your whole portfolio. So try to diversify against a different sector, different company, but not to overly diversify, because sometimes too overly diversified, it's hard for you to actually monitor your investment of a company. Okay, next I will introduce the micro investing tools that we have in the market. So these are the beginner-friendly micro investing tools. Actually, it's offered by Touch e-wallet. So Go Plus is one of the investing tools. Basically, when you put in Go Plus, it's actually put it in the money market fund. So what you can see from the screen is basically it shows that it's 3.3% returns for the Go Plus on the Go Plus balance. So this is one kind of investment as well. So beside Go Plus, then you have a EMAS. EMAS basically you invest in the gold. I think the starting investment is actually 10 ringgit, which is very low. So it's very suited for capital conscious or the money conscious investor, meaning that they don't have much money to start with. So you can also invest in unit trust, and also SNB. SNB is actually the pemodelan PNB's unit trust fund. So for stock investment, if you like stock investment, actually you can look at e-trades in Touch e-wallet. So for e-trades, actually you can open account through the app itself, and yeah, the e-trades is actually providing a very low brokerage fee of 5 ringgit per trade for trades below 10,000 ringgit. So it's like this account is a prepaid style account, means that there's no what we call that credit risk, meaning that over leveraging risk in this account. So means that you have you put in 1,000 ringgit, you only can trade up to 1,000 ringgit. So meaning that you won't do over leveraging. There's no credit or no credit required, credit risk in your account. So after you have registered account, then you can choose Touch e-wallet to do a stock buying and stock selling. So log in, then you go to the preferred stock, then you click on the stock. You can buy or sell the stock. Then you put in the quantity. So for Bursa Malaysia, the quantity is starting at 100 share. So that's the minimum quantity. So if I say you are buying 1 ringgit share for 100 quantity, so basically to start your investment with stock in Bursa Malaysia, you only required 100 ringgit. So you place order, then you wait for your we wait for the sellers to match the order price. So for micro investing basically is that to get you to start to build your investing habit first and build wealth later. So this is basically the last slide of my presentation. So hope you learn something from this session. Yeah.
All right, so thank you so much, Chun, for sharing with us about micro investing. So, if you have any question to learn from to ask our speaker today, you may write them at the Q&A box. So, the first question I see on my panel is um, asked by Steve Fu. How do we determine whether a company earning per share is good? No, is 50 cent good? 1 ringgit per share good? Will bigger company have bigger or higher earnings per share?
Okay. For earning per share, basically it doesn't tell you anything. Basically, it tell you that how much the company is earning per one share. So what you should look at is basically is price per earning lah, the PE ratio. So means that take example that the company that earn 10 cent per year and is sell at 1 ringgit in Besar Malaysia, means that the PE ratio is 10. So this could be determined on whether that this company is good company or undervalued company, undervalued company, or or be or below undervalued company or above value companies. So means that this PE ratio will definitely determines whether this is good investment or bad investment.
All right, thanks, Chun. So
Mm.
the next question here is how do we determine if the target price given by analysts are reliable?
Okay, analysts usually will give just a guidance over the next 12 months. So they are actually based on their financial model when come up with this target price. So the analysts usually based on I think a few factors such as the company growth, the catalyst. I think usually what they look at is catalyst of the company, which drive the price whether it's moving up or going down. So they have one calculation, financial model calculation, which is pretty complex. So it's depending. Not all analysts target price are I would say is that analyst target price usually is just for reference, whether that for use to further analyze a certain company rather than you blindly follow their target price.
Mm. Yep. So you take it as a reference, huh?
Yeah.
Don't just blindly follow. Okay. Um, the next question by Sam is that how do we know if a company cash flow has been window dressed to look good?
Windows dress for cash flow, I believe that this is it's pretty hard to do a window dress for cash flow because cash flow is basically the actual money that the company receive or spending. Unlike the accounting basically you can do a window dressing, the financial accounting. So that's why whenever you look at the company profitability usually is come from accounting methods. So if you look at the cash flow, basically there's lesser accounting methods in there. So I believe that from what I know, I just share my personal opinion. So cash flow usually is harder to Windows dress.
All right. Thanks, Chun, for addressing the question. So the next question here is there any minimum amount for us to create an account in E-Trade and deposit into E-Trade?
There's no minimum account amount to deposit in E-Trades. You can start with 1 ringgit to deposit into E-Trades. But 1 ringgit in Bursa Malaysia, I think you can only buy 1 cent stock. I mean that is the stock with price at 1 cent. So there's no minimum. You can, and there's no maximum in depositing your money inside the E-Trades.
All right. So the next question here is, can we do regular saving plan through E-Trade? Like I want to buy, accumulate, let's say Maybank, or I want to buy ETF, right? Can we do this kind of
Currently,
regular saving plan?
yeah, okay. Yeah, currently, regular saving plans is not supported in E-Trade yet. So definitely this is one of the features that we have put in the product pipeline. Yeah.
Okay. So I have to manually every month and
Yes.
disciplined buy lah, huh?
Mm.
The next question here is, can the ratio such as price to earnings and dividend yield be taken as accurate?
Price plus earning is basically is actually mathematic. PE is a mathematic, means that the price, the current stock price versus the past earning, meaning that the recent year's earning. So basically, this is mathematics that which is just a calculation, so it will be accurate as per se. Similar for dividend yield, meaning that if let's say that you are investing in a company that price as 1 ringgit, and this company on yearly basis pay out 5 cents, means that this dividend yield for the company is 5%.
All right. The next question here is, what is a reasonable PE ratio? Is it sector dependent?
Yeah, PE ratio is actually sector dependent. For some sector which is less popular, you can see such as what do you call that? Furniture. Yeah, furniture, right? Usually you will see the PE ratio is lesser than 10. But for sectors such as technology in Malaysia, I mean technology in Besar Malaysia, like a semicon company, usually they have higher PE ratio as compared with the rest of the sector.
All right. Next question is by Michael. Does E-Trade support London Stock Exchange and New York Stock Exchange?
Currently, we only support Besar Malaysia's markets. So the foreign market is something that we can look at lah in the future.
Okay, not yet lah. If you want
Not
foreign
yet, currently
market,
not yet.
yeah, you can sign an account with Affin Hong Investment Bank separately, okay? E-Trade, not yet lah, huh? E-Trade. Okay. But is it in your pipeline?
Yes, it's actually in the part of the product pipeline
To offer access to
for
foreign market lah.
foreign shares trading. Yeah.
But not yet launched, okay?
Not yet.
So there are a lot of work, to be enabled yet lah, huh? For E-Trade, such as regular saving plan, right? So
Yep.
foreign market,
Still
we
be, yeah.
probably have to wait slightly longer, okay? All right. So, well, we have come to the end of this session. So, yeah, thank you very much, everybody, for tuning into this session. I will just take over the screen control, yeah. So, thank you so much to Mr. Kok Kyong Chun for sharing with us about micro investing in this session, brought to you by Bursa Malaysia in collaboration with Afin Huang. So, thank you so much.
Thank you.